Good afternoon, and good afternoon from London. This is Charles Kelly. Welcome to Money Tips. I am the author, in case you don't know, of Yes, Money Can Buy You Happiness. And today I want to talk to you about insurance. Most of us have some sort of insurance, and if you're a business, many of you will have something called Business Interruption Insurance, which means that, if your business had to be closed down for any reason, you had a fire or a flood or some unforeseen event and your business had to close down, that the insurance company would come in and say, here's a check to cover you for your losses during this business interruption period. And that worked fine. Many of you might have this policy as part of an overall policy, a business policy, where you say, well, I want professional indemnity, I want buildings insurance, and I want, we'll have business interruption insurance as well. I think when I was running a physical business, I had the same sort of thing, and you could pick a load of these things out. And that was fine. These things usually covered, I suppose the most common thing would be fire, flood, someone running into the front of your shop in a bus or something like that, and you can't open for a couple of months. That's the sort of general thing. And then we had coronavirus, of course. And thousands of businesses were told to close down. In fact, they're still closed, many of these businesses, as the small business sector is being literally crushed by these lockdowns. So they went to their insurance company and said, well, we want to pay out. We've got a claim here. We want to be paid out for business interruption. And the insurance company said, whoa, no, hold on a second. We don't cover coronavirus. We don't cover COVID-19. That's an act of God. Well, they didn't quite say they're an act of God, but insurance companies do use these terms like an act of God, or if it's a war or it's a terrorist attack, we're not going to pay. So these are the things they come up with. I don't know where God comes into insurance, but they have used these type of phrases to get out of paying claims. Now, this is not a small thing, because this will cost the insurance company sector billions. In fact, it could cost billions. And one insurance company owner I know said, well, we don't cover COVID-19. It's not in the policy. But there again, business owners said, well, we didn't have to specify when we took the policy what's covered and what's not covered. It's just general sort of business interruption insurance. However, I would say that most people don't even read their policy documents. I was a financial advisor for 25 years, and very few people read even the brochure, let alone the actual wording of the policy. So what happened then is that it went higher up. It went to the FCA, the Financial Conduct Authority, and they brought a test case to the Supreme Court, fortunately, because otherwise business owners would have to be then suing insurance companies, which could take years and cost them money that they didn't have. So the FCA took a test case to the Supreme Court, the highest court in the land, and then the Supreme Court judges have now found in favour of small firms, and they will be paying out on business interruption insurance. So that's great news for small business owners who own physical businesses, restaurants, cafes, and especially in the hospitality sector that have had to close down. So that's great news. And that's good that the FCA have done this. I think it's brought a lifeline now to some of these insurance. Some of the insurance companies affected are the Hiscox, Arch, Argenta, MS, QBE, RSA, which used to be Royal Sun Alliance. But there are 60 other insurance companies not part of that test case that will offer similar business insurance policies. So if you've got one of these policies, now's the time to look into that and see if you can get a payout. And this ruling actually provides guidance for over 700 policies affecting 370,000 small businesses. So many of these premiums could cost £1,000 a year, and they might have been paying this for years without ever claiming. And I've got various kinds of insurance. I've never claimed. Having said that, when I've claimed on things like car policies and that sort of thing, the insurance companies have been pretty good. They paid out, no problems. A friend of mine was claimed on her medical insurance. She got paid out, eventually, but it was paid. So not all insurance companies are bad. I mean, they do pay out, millions and billions in claims every year. But in this case, they were trying to kind of wriggle out of it, really, and understandably, because it's a bit of an open-ended thing. Normally it's very clear why a business is closing down, but then just to say, well, we're in lockdown 1 minute, we're not in lockdown, we're in tier 3, we're in tier 2. Have you really closed down? Are you offering takeaway service, or have you closed down completely? It's all up in the air. So I think this test case will help people get through this and hopefully get paid out, and it might help them even survive the whole epidemic and get back to business when this is over. When I don't know when that will be, but they're talking about this going on till March. The cases in the UK are, the infection rate is going down, although hospitals said they're overwhelmed, but the case infection rate is going down, so hopefully that is good news. Other money news is that, well, not such good news. This is HSBC are set to close 82 branches in the UK. Now, they were our business business bankers, and I always found them very good. And it's a shame that they will be closing down these branches. But as with a lot of banks now, they're moving people into online banking. I mean, every time I used to go into my bank, they say, "Oh, have you been online? Have you? You know, you can do this online." And I get fed up with it. I'd say, "Well, yeah, but you're talking yourself out of a job here. If you keep telling me to go online, I won't need to come in here." You know, eventually I am online now, but only because I can use it on an app on my phone. The previous NatWest online system was a nightmare. It used to throw you out every time you used it, but on the app it's very good. So I don't need to go into the branches that often, but it will be bad news for people who are not online. I mean, my mum, for instance, she's 80 odd, and she's not online. She doesn't have Wi-Fi in the house. She doesn't even have a mobile phone, so she's not going to go on to online banking. She wants to go down to her branch, and when she wants cash, she can get it out of a machine, or she uses cards and that sort of thing. But she wants to be able to bank cash or bank checks. So it will affect people, but this is inevitable. The big problem for this is also it's going to affect jobs. The banks have been moving jobs abroad for years now. Moving some of the white-collar office-based jobs abroad. They want our business here in the UK. They want us to use them and use their cards and that sort of thing. But when it comes to jobs, they want to employ people cheaply in countries like the Philippines and India. So if you ring up HSBC now, you'll probably be speaking to someone in Manila or maybe in Mumbai or wherever. And this has affected probably millions of jobs in the UK, where they're moving the jobs out, but they want the UK business. But now ultimately this could lead to no customers, because if they do that to every job, and every job goes down the route of AI or being outsourced somewhere cheaply, where are the customers going to come from in the UK? So that's my little rant of the day. But that's something that's happening now. And I also read that China's economy grew by 6.5% in the last quarter of 2020, and it grew by over 2.3% over the year, whereas most economies around the world are contracting. We're in recession here in the UK. We're in the deepest recession and monetary crisis in 300 years, in fact, and the world is suffering, while China, where gave us this disease, are okay. Yeah, fine. I saw a documentary last night on the BBC, and China said, yeah, we're okay. We can go out anywhere now. We're free to breathe the air freely, and it's no problem here. Great, well done. But what about the rest of the world? We've been infected with this disease. In fact, Chinese people were coming into the UK all of last year, giving us this disease, and now they're okay. And we've only just this week started to close down some of the air corridors or some of our borders and insist that people have a coronavirus test. Up to that point, up to this week, I think, was it Monday? We were just allowing people to come into this country, and then they would not even be given a letter, but they would pick up a form at the airport if they bothered to pick it up, and that would tell them you must self-isolate for 14 days. Otherwise, you'll be in trouble. Well, do you think people took notice of that? Well, no. I know people who didn't. And it's unbelievable. They were coming in from America last year, when America was the hotbed of the virus. Italy, China, Hong Kong, they were flooding into the UK without any restriction at all. We couldn't go anywhere. We were told we can't go anywhere, and particularly in the last couple of months, and this new variant has come in. And yet we've only started last week. The government has finally listened to people and said, right, we will now insist that everybody who comes into the country will have a negative test, and we'll have to go through some sort of self-isolation for a while, but they can't really police that. But in the meantime, people's holiday plans from the UK to go abroad have been cancelled, and most countries won't let us near them, let alone come into the country. So anyway, good luck to Chinese people. Their economy is growing. That's great. Good news for them. And the other question I want to ask here is, as London's population, for the first time in decades, has fallen, people are moving out of London, do you think that city centres will ever recover from this virus? Because we've got offices now making people work from home. Will they need these offices again? That's a big question, isn't it? And the same thing's happening in America. People are moving out of the big city centres, and prices of properties in the suburbs and the outskirts and in cleaner environments, more rural environments, are going up through the roof. And similar things are happening here as people are, because if you're living in the city in a small flat or a small room even, because it's near to your work, why would you need to do that when you don't need to come into work anymore? So people are moving back to their parents, or they're buying properties in the suburbs or further out because they realise they won't have to commute into work every day. But is that the long-term solution for businesses? Well, personally, I don't think so. I think city centres will bounce back, maybe not to the same level that they've been at, but companies are starting to realise that it's not that easy having all these people working from home. Well, first of all, are they really working, or are they homeschooling their kids? Are they doing their laundry? Are they sunbathing in the garden? In the summer, of course. Are they actually doing anything? Are they just logged on? Meanwhile, they're watching Netflix, or they're having a chat with their friends, or sorting out other parts of their life. Are they really working? So some companies are complaining that they're not quite getting the productivity. Other companies are saying, well, yeah, our business is productive with people working from home, because you can measure certain things very easily. So it'll be interesting to see what happens, and whether prices in London will continue falling as they have been, not by devastating amounts, but just be interesting to see what happens. I was speaking to someone I've been on property courses with, Kevin McDonnell. He thinks that the city centres will recover, and people will go back to work in offices when the pandemic's over. He's got a business, and he said it's impossible to control people who are working at home, or as he put it, supposedly working at home. So it'll be interesting to see. A lot of people are asking what will happen to the property market this year. Will it crash? Well, that's a good question. Nobody really answers that question, because of course nobody really knows. We know that property prices have continued to go up last year, but not in all areas. Some areas have fallen, some areas have remained flat. City centres like London, prices have sort of fallen back a bit. But I don't see any huge bargains out there, because I see property owners holding out. They're not desperate sellers. Well, some are desperate sellers, but not everybody is a desperate seller who will sell at any price. So they're kind of holding back and saying, well, we'll wait for the market to recover. I'm not worried about selling right now. I'll stay put. And you see lots of cranes in the air, lots of scaffolding going around houses where they're building up into the loft, because you can do that now under permitted development, and building extra rooms rather than moving and paying all that stamp duty. And speaking of stamp duty, there is a stamp duty holiday at the moment, which is fueling demand particularly for first-time buyers and home movers who live in their homes, not renting them out. But that's set to come to an end in March. We don't know whether that will be extended. We shall have to see. They said they won't extend it, but I don't know what will actually happen. So that's brought in a little mini boom really in the last 6 months. I don't know what will happen after that. I know that the property market seems high at the moment, in my opinion. Yields are very low on rental properties. If you buy a rental property, the yield you can get, even in areas well outside of London, are not very high. Similar thing with shares in the stock market. Yields are very low. On the S&P 500, the yield you would get now is around 2 to 3%, 2.5%, I think. And you can find that on a lot of shares in the UK. PE ratios, price to earnings ratios, are in the 50s, 60s and even hundreds of some companies, and yet they're still going up in value. This, I think, is partly due to the financial stimulus, the amount of money that governments and central banks are literally flooding, not just pumping, but flooding into the economy. And now Joe Biden, the new American president elect, has said that he's going to bring in packages in the trillions of dollars, not billions, but trillions of dollars. The UK has probably spent 300 billion last year, and that is probably fueling the markets to keep going up at, I think unrealistically high levels. And a lot of the stock market growth is down to the big tech companies, the FANGs, the Facebooks, the Apples, and Netflixes and Googles and that sort of thing. That's kind of fueling the market. But to me, if all these companies and the economy is down, profits will be down, companies are suffering, how can the market still go up? Yeah, you're okay if you're Amazon and you're Netflix and people are sitting at home watching Netflix and they've just jacked up their prices to $9.99, but you can get away with that if you go for the non-HD package and it will stay at $5.99. But they're doing okay, and Amazon of course are just everywhere you look now there's a white van delivering something in the street, so they're doing okay. But what about all the other businesses? What about the businesses that have suffered? The airlines, the cruise industry, the hospitality industry, the hotels. It must be empty. It must be killing businesses. So how can the stock market keep going up? Well, in my opinion, it won't keep going up. Something's got to change. Something's got to give somewhere. It always does. After a certain period of years of growth, it always changes. It happens. When it will happen, I don't know. But I wouldn't want to have all my pension fund exposed in the stock market right now. That's only my opinion. I'm not your financial advisor. You've got to make your own decision. Lastly then, Mastercard. Anyone who's got a Mastercard could get compensation after another court ruling saying that they should pay out compensation to possibly millions of cardholders who may have been overcharged for products. Now this relates back to the amount of money that Mastercards were charging retailers. They brought in a test case here, a sort of a class action, saying that retailers were overcharged by Mastercard, which then meant that they were overcharging customers. Now we know that a lot of small businesses don't like using credit cards, particularly for some reason Chinese takeaways and Chinese restaurants. Oh, no credit card, cash only. Because they're being charged a lot by the credit card companies. Now, some of these companies are forced now to go to cashless payments, as cash seems to be disappearing from society. But there's still a few holding out for not dealing with credit cards because of the charges. So it'd be interesting. Now, this will have to be decided actually how much compensation they're going to pay out for all Mastercard holders. But I was looking for my wallet. Oh yeah, I've got a Mastercard. Maybe I'll get a payout. They're talking about something like maybe £300 each. But it's a welcome little thing. Obviously, Mastercard are up in arms about it. They don't want to pay out all this money. So we'll see what happens. But it's another sort of class action there that can benefit consumers. Mastercard argue that it's just the lawyers who are going to benefit from this. Of course, they are. They're just taking a chance. But could this happen to Visa? Could this happen to American Express? American Express are the most expensive, and hardly anybody even wants to take them. Anyway, we shall see. So, and the other thing you want to do if you've got a small business, you're self-employed, look at the lockdown grants that have been provided. Go on. I put a link on my website, moneytipsdaily.com. Have a look at that because there is a lockdown 3 grants that has come out that you could possibly claim on. So have a look at that. So thanks for listening. Do check out my website moneytipsdaily.com. And if you want a late Christmas present or an early Easter present for somebody, Yes Money Can Buy You Happiness, available on Amazon, goes through all of your money worries, money issues, and how to manage your money correctly and very well. So have a look at that. Thanks for listening, and have a great evening or morning or wherever you are in the world. Thanks for listening. And thanks for everyone who tuned in on, I've got Lexani here, Marie there in the Philippines, Joel, yeah, great to see you, Joel. How's your property journey going? I hope you're doing well. And, that things that started off the year well for you. Property is a funny one. I think properties are selling for people who want to live in them, owner-occupiers. It was a very difficult year last year for landlords, buy-to-let landlords, investors, just things like tenants moving out or perhaps going abroad, going home. A lot of landlords complained of voids in the last year, and I had the same sort of problem. When you're refurbishing properties, that a lot of the retailers selling the materials were not open properly, so it's been a difficult time for landlords and property owners in the last year. But property is still, in the long term, is still a good investment in my opinion, and you can use leverage to buy property, which you can't do with things like shares or gold or silver or Bitcoin or whatever it is. But property, I think, has over the years been a sound investment. But who knows? We're in strange times now, so you've got to make your own decisions there. So thanks for listening and have a great evening. Yes, Joy, we must catch up soon, do a little call session there. Thanks very much. Bye for now and have a great evening. Bye.